I'm really excited to talk to you about our third part for the Employee Retention Tax Credit. We've already talked in part one about the revenue test, the gross receipts test. In part two, we talked about government shutdowns and how it impacted your business. So now part three, we're going to talk about the other area of businesses, the ones that started during COVID, and that's called the recovery startup business. So in order to qualify for the recovery startup method, there's a couple things that we have to dive into. One, we have to establish that you were a new business, meaning you started after February 15th of 2020. What it means to start your business can get fairly complex. It's not always at what date did you apply for your EIN number. So if you're right on that border, you may want to look at when did you actually start spending money or acting like a business. The second piece of qualifying for this method says, did you already look at whether you qualified for the revenue method and the startup method? So go back and review part one and part two to see whether or not you hit those first. And if you didn't, then it just says, did your 3 prior years of business have less than $1 million in annual revenue on average? If so, we've hit all 3 pieces, you should be able to qualify for the RSB method. That will allow you to calculate your credit for Q3 and Q4 of 2021 and put those onto your quarterly tax returns. I'm excited that we've been able to talk about the Employee Retention Tax Credit. Follow us along because we're going to continue diving into additional credits. Next up is the Research and Development Tax Credit, one of my favorites. Business owners need help, and that's who we're here to serve. That's why I'm doing this for you. So I look forward to sharing all of our tax secrets with you. Let's go work together.